So once again, a very warm welcome to everybody. There's a quote by Benjamin Franklin. He said that by failing to prepare, you prepare to fail. So if you prepare and plan properly, you will definitely prosper. And to show us this way, we have with us CA Chaitanya Joshi. And I request CA Krishnaji to give a formal introduction to him.
Good morning. Thank you, convener, for giving me this opportunity. So today's speaker is CA Chaitanya Vinay Joshi. He is the Senior Director of Assurance in BK Khare and Company. By education, he is become ACA, DISA, Diploma in IFRS from ACCA UK. Mr. Chaitanya is having more than 17 years of experience in providing services mainly for BFSI sector, manufacturing sector, and to other large corporates. He handles firms' large tax audit assignments and technical part of firm's technical core group as far as any matters and issues relating to tax audit. He had delivered different lectures across ICI CP study circles, including last year at Vikasa also. He had delivered various lectures on tax audit aspects and recent participation in Q&A session on tax audit in August presence of ICAI President. He has qualified as Diploma in Information System Audit and also has a 3 years of experience in handling one of the top 10 Indian tech companies audit. He had achieved expertise in handling large data using data and analytical tools. Mr. Chaitanya loves to monitor young professionals and spend his non-work life actively in reading and playing sports. With these words, I request Mr. Sumit Gob and our regional council member Pinky Kedia to give a memento to the speaker. Now the dice is yours, sir. Thank you.
Even visible at the back. Thank you, first of all, for inviting me here, especially picking up. Yeah, this is a long weekend after the Holi. So I think I congratulate you all for participating here at the 9 o'clock on Sunday. So as ma'am rightly quoted the code about the planning. I think this is when the year end is coming, 31st March 25. I think this is the best time to learn about the planning the audit. Here, I may not go too much into the technical aspects, which I'm sure you all must know, and we are not students here. But at the same time, we'll go with the flow, so and we can discuss whatever you wish, including the case studies. So let's learn into it. So here, as I said, that there will be some practical insights written into the formal steps of audit of how to prepare, plan, execute, and any specific knowledge that you need as participants, please tell me so that I can cover those things specifically. Of course, you can intervene at any point in time to discuss your case studies. So you can have use cases discussion. We can ensure that maintaining the client confidentiality. We can have useful discussion and we can arrive at some solution. Because I think today's environment, especially NAFRA coming into the picture, I'm sure that we all are, I'm not saying scared, but we are all geared up to ensure that the audit quality is not suffering. At the same time, ensuring the required compliances. So feel free to intervene at any point in time. Here I have just designed something different because at the start of each phase, so the presentation is one typical topic in terms of prepare, plan, okay, and then prosper in the sense ultimately the reporting part. So before we start each session, in my experience, or I'm sure some of you must be, will agree with me on some of the core deliverables that we have to ensure before we go to the formal steps. So there could be some repetition, but it's worth discussing. So this is just to set the tone, and the feedback is most welcome. You can interrupt me at any point in time so that we can discuss wherever required. So prepare. So which is the core part of preparation? This is, as I'm repeating again, this is coming from the experience in terms of what we can see and considering the recent environment now. Client acceptance procedures. Can anybody tell me what I mean by client acceptance procedures? Anyone? Yeah, that is there. Yes. Scope of work, absolutely right. Yeah. Terms and conditions. Yes. Yes. So here again, so these are all the formal steps that I'm thinking of. But in today's environment, there is one more step that probably we may have to think that, especially for new clients, whether we as a CA firm able to serve their clients. For example, we are focused on manufacturing clients. Some client is coming to you who has a presence in, let's say, northern part of India, is a tech company. Can I accept this client? Can I accept this client? Yes, you can, provided you have right infrastructure in place. Provided you have reach. For example, you are focused or your office is in Mumbai and you have to serve the client in the northern part where the head office is, let's say, in Gurgaon. Okay. So the client acceptance here in our firm also what we mean that whether the pretty typical matrix, whether that client will fail into. For example, let's say you are having a practice, medium size practice, and some company of 10,000 crore is coming to you. Okay. Will you really accept this company? Certainly not. Okay. And other than that, company is coming to you, that may mean that there's something different here because they are not going to the big firms. So, everyone should have some kind of criteria set in or some standard parameters as to which when the client should be accepted. Okay. So the steps are all right in terms of engagement, scope, etc. But this is where I think the most important part lies. Independence throughout the engagement. Now, uh, I'm sure I will repeat this again and again. You are seeing the NAFRA going after the CAs, and there are issues which are getting highlighted. One of the main is the independence. Now, independence throughout the engagement, because generally what we do is whenever we assign staff to the audit or even the partner to the assignment, you will have the independence declaration at the first go. But throughout the engagement, it will not be necessary that person or persons could be independent. You have to take that confirmations. Independence not only in terms of, let's say, if you are having a listed entities audit, not only in terms of holding of stocks, there could be some other contracts, maybe with the derivatives, etc., which may affect the independence. And mind you that in today's time, regulators take this really seriously. So I think, again, in my experience, independence is the first and foremost when you accept the client. Communication with the previous auditor. We all are familiar with the NOC procedures. Okay. And earlier there was a saying that if the response is not received within, let's say, 15 days, so it's deemed to be accepted. But here again, my urge is that it should not be deemed to be accepted because you are also dealing with the other member of the institute. So it is not right on our part to accept or deem to accept anything. So probably when you are taking a new client, please ensure that you are receiving the NOC within the prescribed time. Firstly, you have to send within the prescribed time limit and then expect the response also positively. Okay. Because I'm sure there were a couple of recent cases concerning this that NOC was not sent and the auditor claimed that I sent the request. Unfortunately, it was not through the courier, it was hand delivered. There was no evidence, there was no response also by NOC. So we don't have any such situations. Of course, the auditor will definitely in most of the cases will give you the NOC. But there could be few issues that you may want to discuss with the previous auditor. So with the presence of the management of the company, or even sometimes you can directly reach out to the auditor and discuss any open issues. Because something is amiss there, because not all the things can be reported in the audit report. So in the audit, you see the report. However, there could be some issues. That's why it's important to have the communication with the previous auditor. Yes, terms of engagement with no scope limitation, data confidentiality clauses, etc. Because these days again, there could be some accusations as to from the auditors and the data is leaked. So the restriction on the data confidentiality, working papers, what kind of data one must receive. For example, if you are doing audit of NBFC, you are getting the client data with you, or even the insurance company. Up to what level you should get the data? Up to what masking you should get the data? So some of these terms can be incorporated into your engagement letter. So this may not be there in the standard format, but you have to make it very clear because unless you have certain information with you, you will not be able to audit the data. Because I have myself encountered the situation that at the fact end of the audit, client is saying, I will not give you the information because of confidentiality clause. If you are doing the audit of a company and if you don't have the salary data with you, how will you audit? So unless this is been agreed upon in the terms of engagement, so you may face some challenge. Yeah.
That scenario, what are the precautions that the auditors firm should take to ensure that if price sensitive information is being leaked from there, and because of that, the shares price is affected. And if the auditor is accused in that scenario from your firm, data is leaked.
Okay.
What are the precautions that one has to take to demonstrate to the client or maybe to the SEBI that the data is not leaked from my office or maybe let's say from auditors?
Okay. I think to answer your question, so these days, like the company, they will have their information systems security audit done. Even the firms also needs to do this. For example, now I'm carrying an office laptop. Okay, I cannot send any mails outside of my system. There is no pen drive access. All other accesses are disabled. In case there is a Chinese wall sometimes, if you are working on one client, even you cannot pass on this information to your other team members. Okay, so there are some security controls which can be put in your laptop, and that you have to demonstrate because these days, especially MNC companies, they have started asking for this information security compliance from your IT team or CA from IT team, which will ensure that confidentiality is there in your data. The second aspect, these days also common. If suppose you are doing audit of insurance or sometimes even a bank, mostly in case of bank, they will give their own dedicated laptops or the systems where you will have of course, you will not be able to transfer any data to your own system. So this is the best mechanism. In market, there are a few companies who provide the services. For example, if suppose the app is deployed in the company side, so whatever information you need to send to the auditors, that will have only you access, that will have only limited access. One person can only see up to a certain period of time. Okay. So no question of data. Of course, in case of any social engineering, etc., there is no prevention that you can do, but you can go to demonstrate these actions to the regulator and you have to ensure that and educate your team members. That's why independence also declares that you will not share any kind of data with anyone, even to your partner sometimes. Let's say suppose somebody is asking, some different partner asking, इसका profit number क्या है? You should not be able to tell because you are binded by the independence agreement. Okay. So especially in case of new client, I think scanning the past financials now, you have access to the NCA site, you can download any financials, okay, before you accept any engagement. But also you give you information about the company, about the which the company is in, and also about the purpose, or even senior management. Because any negative news about it, should actually be the trigger for doing the further risk assessment, whether you have to accept this client or not. I think this is most crucial, and in our experience, we have declined a couple of clients just basis this issues. So there was an NBFC company, there was an RBI order against it. We could find in the public domain and we could challenge the management as to disclose this to us. So we are declining the engagement. Of course, the last and most important is the audit regulation. I think less said than better about it. But we need to, I think as a community, we have to now start going into the next steps as to more non-negotiable regulation because in today's world where Section 144 is there and there are so many things, especially when you are doing audit of listed entities or companies where the group is listed. So, you should have the adequate remuneration to your services. And rather, if you are not having that, you may not be able to provide the adequate staff, adequate infrastructure, for example, as rightly pointed out, the information security compliances. So these are all overheads that as a firm we need to incur. So unless those are not indirectly paid by the clients, we may not be able to serve. So I think for all our Indian firms, we have to ensure that the remuneration is kept. Of course, when you are going for a new client, you will always compare the fees with the last audit fees. Okay. But let's say if you are 100 crore company, and if you are comparing with 1 crore company of earlier year, of course, there will be difference in terms of quality of service. Any questions or anything which you would like to add here as core aspects of when you prepare for the audit or prepare for the planning itself? Yes.
See the balance sheet value, which is very good, the company in the file application for the information not impacted. Either what happens, once the matter is admitted to valuation audited by the public, we challenge on the public. Most of the values like data stock, because it's not available.
Okay.
Belongs to corporate data, for India. IT has to make compared to the corporate. This has the also need to be very careful to see. And one more, you have the counter guarantee for given by the companies to other companies. Most of the balance sheet which I have seen in the economy, not really impacted. Return to that, the initial need to pass order against the auditor, why you are to.
I think it's fair point, and especially when accepting one client, which has to be taken care of. So, I think I'll have this to the next presentation. Any more from the audience? So let's now discuss each and everything. So of course, when you are accepting the new audit, there has to be a formal proposal from the company. The legal sharing of work papers. See, for example, now towards recently somebody also in a the standard is applicable technically from 1st April 26, but even though today all the members, it's deemed to be applicable. So how to share the work papers and under what circumstances I can share the work papers, that should be forming part of the engagement. AT1 now is filed by the company, so we don't have to worry. You have to ensure you are eligible under Section 141 of the Companies Act. Communication with the previous auditor until we receive the signed AOC, you should not commence the audit or you should not accept the audit. That's the first rule, regardless of anything. Yes.
The communication with the previous auditor, for which circumstances.
If you are accepting the new assignment, so if you are accepting the statutory audit, so before you accept, you have to have the communication with the previous audit.
Okay.
So, let's say in the AGM, okay, the company has resolved that, company EBC will do the auditor. And then we have to formulate that, we are willing to honor to the auditor and we confirm the acceptance. At that time, before you give the formal acceptance, you have to write to the previous auditor, stating whether he has or she has no objection. 80 hours use of the auditor. I think that is also we have to ensure that we are all members of the same fraternity, so our goal must be clear. So this NOC request should be sent and also remember the 15 days. And 15 days, public days, you have to ask somebody to reply. Even on email is also fine, but there has to be formal communication.
Second question,
Yes.
if the previous auditor or the ex-auditor has given the NOC without receipt of the fees also, with the communications with the client, but whether the new auditor has to ensure that the fees of the previous auditor has been paid later on.
Actually, not as such, if you ask me, technically it's not required. Okay. But if suppose the audit fees are payable, okay, we have to inquire with the company whether there is any dispute. So if there is no dispute, then no question that he will not be paid. Okay, if suppose there is a dispute, then we can ask the previous auditor still that why you have given the clearance. Because I understand in practical world sometimes this can happen. As a member of the institute, it's our duty to ensure that the deals are clear. But technically, if you ask me, even if you accept the engagement after the receipt of NOC, I think the next auditor will not be at the fault.
Like traditional, like is it a non-paid? This auditor says that unless the visa paid, I have not, it is where I have got no. I should, the other auditor should wait till the.
Yeah. I would have to accept or not accept. So next auditor cannot have any condition acceptance. I think again for new opening balance procedures becomes key. So now we have already accepted the audit. The first thing which you have to procedure, we have standards for audit. And again, in my experience, more than 50% of the times in today's world, still people think that matching of last year's closing balances with current year's opening is equivalent to opening balance procedures. Am I correct or not?
Be correct, because sometimes what happens that the closing balance of previous year may not match with the current year because last was already prepared. But later they have changed the balances. Is it possible that
No, I'm saying that with the signed copy of financials, you are matching the closing balances with the opening balances.
yeah.
So this arithmetic matching is the only matching which is the opening balance procedure. Is there anything else that we need to do?
Anything else?
Yeah, what do we need to do?
So we have to check the insurance.
Okay, okay,
The rating of the form which are right, P&L and balance sheet. It should be compatible with the standards
okay,
according to the size of the company.
okay. Partially right, yes.
Each ledger account.
Each ledger account, okay. So I think the most fundamental thing that we need to do is apply significant accounting policies and practices to the opening balance and annual opening balance. For example, in a manufacturing entity, you have trade receivables, okay, you have provision for doubtful debts. There is set policy by the company around it. You have to apply that policy and you have to ensure whether the same balance is coming as a wrong closing balance. If suppose it is not, and there is a wrong application of the policy, then there is an issue in the opening balance. So as a risk auditor, what you are doing is, I am not taking the opening issues with me. So management needs to adjust those. Okay, because when you are signing the audit, so for example, 31st March 25, balance sheet date, so you are signing as at a particular date. If you are appointed only after 1st April 24, you will not simply take the opening balance of 1st April 24. You will apply the procedures, you will apply the for example. Typical, again, manufacturing, trade receivables, even trade payables, direct confirmations are being sent. Whether the previous auditor sent the confirmation, what are the issues in the opening balance confirmation? You have to ensure all these things. So only arithmetical accuracy or accuracy of trial balance mapping, etc., is important. But we need to ensure that the policies, procedures, practices are getting applied. And we have to highlight to the management. So of course, we have to go into each ledger account, we have to ensure that balances are also matched. But another thing issue, so when we are discussing with the previous auditor, and if he's saying that inventory has some kind of issues or there were of course one issue is physical versus books. Okay, and last year and management will give you a theory as to okay, because of materiality, because of some practical issues, we have closed the last year books of account. So the difference still lies in your opening balance of inventory. So as a next auditor, I should not accept this. Whatever is the difference, first you have to adjust as a rectification entry or as the next entry in the next financial year, and then only you will proceed with the audit. Am I clear?
The last year balances cannot be changed.
You cannot change.
Current year only you have to.
Yeah, current year only. But the only thing is that you have to present to the management in case, especially suppose it's a listed entity or a big entity, where there is a formal set of audit committee or board of directors. That we have performed this opening balance procedure. These were the issues noted, and this is how we have rectified in the current year. Any questions or any clarification? Yes, sir.
Accounting ratio, previous year accounting ratio, if we observe that ratios were not appropriately calculated, these will not have any impact on our financials, but how to report it? Because you have to report the previous year figures also, and ratio were not correct.
Yeah, see, sir, regarding ratios, for example, when you are signing the balance sheet, okay, the balance sheet will not contain any ratio. So the ratios will give you the indication of whether there were any issues in the closing balances which you want to take care in the opening. That may not be exactly forming part of opening balance procedures. Okay. Unless, for example, let's say if you have signed the accounts or in today's ODR, you need to give certain ratios to the stock exchange. If you find any issues on in those ratios, yes, you have to definitely highlight. And in the next auditor, you are going to compute ratios in a different way. That you can definitely communicate with the auditor. But definitely may not have the impact on the opening balance procedure unless the number itself is wrong.
I think this question is while filling the CCD, if the ratio of last year is incorrect.
Acha, tag, you have to that's the
Yes, and current year also we are filling those last year's ratio. Would we be correcting the ratios or would we be writing the ratios that we did last year?
Okay, fine. So you are writing, I am writing statutory audit, term to variant audit. So in this case, I think you have two options. Either you correct the ratio, and last year you may or may not correct. See, as of now, I'm not sure as to whether it will have any implications as far as the use of tax code is concerned. But you can correct and you can mention the explanatory notes. I think with the tax audit, you can have your own explanatory notes as to what is the stand that you have taken. You can very well explain your stand. Or the second option is to compute the same ratio in the manner calculated last year because then there will have some discrepancy. And you explain yourself in the note. I don't think so it will have any kind of implication unless at the time of assessment, suppose you face anything and you will explain your position. Better to correct the ratio rather than simply carry forward in the mistake. Yes.
So I just wanted to ask, coming the engagement letter, is there any prescribed revised format on the engagement letter or prescribed by the institute or
Yes, prescribed by the institute.
revised by the?
I'm not sure whether it's revised. Okay. I think it's there in the standards for audit. Okay, lastly, it is all fine. So as I've already mentioned about data confidentiality, etc., then you can check. In certain cases, especially in MNCs companies, they have their own standard of engagement letter, international approved. It may have some additional clauses. I think those clauses you have to check, you have to ensure that you really accept those clauses or not. I don't think so. It is binding on us as members that you have to follow a particular format of an engagement.
We can on our basis add and.
Yeah, but just ensure that minimum clauses which are there in our uh, yes.
Bank balance. My experience in one of the entity, when I checked the opening balance, it was different for the bank statement. Then I went to the previous auditor and he sent me the bank statement till 31st March. But after that, whatever statement he got, after that there was 10 to 12 entry on 31st March itself.
Okay.
So better to take balance confirmation certificate from bank or as on 31st March. We should not rely on the bank statement because nowadays in online process they can do online transaction till 31st till 12th of 12th PM.
11 they can do.
Yeah. So I request all and I advise all the members that you should not believe on the bank statement till 31st March. We should have a balance confirmation certificate. So on the 31st March.
I agree. And just to extend this, I think ICI has also given few things. There is one service called auditconfirmations.com where you can take their help in terms of sending out these confirmations. They have ties with the banks. They have separate APIs in the technical language they say. So this can make process much smoother because see in some way they also say that manual confirmation sometimes may overrun the system part, but you're right in terms of ensuring that bank confirmation. And that's why I said extending bank confirmation to one part, even the investments also. Sometimes the next auditor can ask the confirmation directly from the custodian that you confirm which balance as at the last year. Especially for PF audits. Yes, yes. So I think balance confirmation these days is very critical, even from trade payables perspective. So we always think of assets, so data, bank balance, etc. When payables is becoming very critical.
So what I am doing in for easiest way, I am asking client to give me a bank statement till 2nd April.
Okay, great. Yeah.
So if the statement is till 2nd April, then the balance of 31st March is.
Yeah. Absolutely.
And it happens also that you get a value date somewhere around 5th March, 5th of April for the earlier bill.
Earlier.
That also you should check.
I think earlier. Is your second typically. From the investment perspective, we need to continuously check are there any integrity issues, both from even from the auditor side and even in the management, etc. So we have to keep this watch. Significant matters related to client reputation. Okay, so if you have some negative news about the company and it may or may not relate to your finances or the financial statements, but you have to keep a watch on these things and ask client whether it will have any kind of impact on the audit. Conflict of interest. Sometimes it may so happen that you are accepting audit of a competitor, and there could be some issue, or in that case, it sometimes there may not be conflict, but you have to watch this, including let's say if your signing partner is director in the company where the company is competitor, whether that can be a conflict, and then technically whether that signing partner should be changed to another partner. So these things, and practically these things happen. We have to keep a watch. So whenever you go for the second one, the first question could be, is there any rotation meaning in the top management or even in the senior category? If the answer is yes, if there is a lot of churning in the top cadre, I think it's a red flag that there is some issue in the company. Even with the auditor side. So for example, even let's say if you are a statutory auditor, tax auditor could be different. And suppose there are frequent changes happening in their team, or even the tax auditor is also getting changed. Yeah, sometimes the company is appointed forensic auditor. So what is the need of appointing the forensic auditor? And from the reply, you can gauge whether the company is actually truthful in answering this question. So frequent changes in employees. So in case of, let's say, if you are doing an audit of tech company, okay. So in tech company, the lower level employees, they frequently change. So that's a given thing as per the business understanding. But all CXOs or the chief executive officer, if there is no churning, let's say within 1 year of your accounting as auditor, that frequent change you have to involve for.
Attrition rate.
Attrition rate.
The management staff.
So we have to see, for example, you are as an auditor, your first level of reporting is to the chief financial officer of the company. So to the CFO, you can directly pose this question: why there is so much attrition in the top management? That's the straight question you have to ask. Yes.
Do some investigation. So how, as a statutory auditor, what is your role in extending our procedures? That is point number one. Point number two, how we should deal that particular fact in our audit report.
Okay. Good question.
So this is actually has happened yesterday, just go back.
I know.
So
Okay.
in that context, if we speak without taking the name of the time.
Yeah, I know. Okay. Fine, sure. So, forensic auditor has been appointed. First of all, I think from the governance point of view, if I can answer this, if the client is very clean, or rather, I'm saying transparent to you, so before appointing the forensic auditor, as a statutory auditor, he will come to you and he will tell you that this X, Y, Z thing has happened, and we are in the process of appointing a forensic auditor. You getting to know from the outside world or from outside the company that the company is appointed a forensic auditor, that itself is a red flag. In my understanding. Now, how to deal this in your audit procedure? A, so you have to ask straight question as to for which area this forensic audit is being carried out. For example, if suppose in a particular area, so let's say as extending example, let's say if there is a bank and they want to investigate their derivatives portfolio. Okay, now the specific area to this. So in our stat audit, when it comes to the audit of derivative portfolio, we have to be vigilant enough as to taking care of that issue in our audit. May not duplicate his work because forensic skills are very different, and he will definitely go beyond the accounting. Okay, but you have to take this care while you do the audit. In typical extending this example, in my understanding of it, concerning this level of transaction, you should have one expert in your team. This may not be chartered accountant, it may be engineer, it may be, I am guy who don't know, who has the expertise in the market rather than expertise in the accounting. So that is what you can do. And the third thing you should ask about the disclosure part of it. Now, in this example, in my understanding, they should have disclosed this, let's say, while doing the or while giving out the limited review results of December quarter. I don't know why they have not disclosed this fact, but as a rule, every auditor will, and especially for a listed entity and having such high stakes in the public, we have to disclose this fact. Let's say if you are doing the quarterly reporting to the LR, client definitely will resist in terms of you may or may not disclose this, but you have to firm with this, and this especially you have to take care in while doing this year-end audit, whether it has any impact on the numbers. Because forensic audit will go even in the previous years, and they may dig something that you may have already signed off.
Exactly going to happen in this.
Yeah, it will happen. So, there will be some restatement, etc. So let's see how this will go, because there are a lot of regulators now will come in, NAFA, ICI.
Especially proactively, you have to think when there is a change in the RBI circular, and when, especially after the aftermath of that RBI circular, certain things need to be seen afresh. But why RBI is coming out with this kind of a circular?
Yeah,
They are
yeah,
examining the books of the accounts of when they are doing the supervision or the audits.
yes.
You have found certain anomalies.
Yeah, I know,
Definitely, to be very motivated.
absolutely.
Yeah, actually, in this particular case, there will be now. So, all this to be made. So now to explain. Next one is typically times simple with freedom.
Yeah, I think it's too early to comment on anything, whether how much, to what extent the auditors were also there. But yes, definitely. But one thing that all we as professionals we have to think through is, and I think in some way I will cover in the presentation also, that we should have subject matter experts in our team. Because this subject is not even friendly to me also. I mean, basic things. I don't have to in-depth, I don't have to in-depth knowledge of derivatives market. And especially the kind of issue which is there in terms of internal, external trade, etc. So I think even from the point of view of, if now as a CA firm in our firm and in many of the firms now, we have our own IT staff who do IT general control audits, applications audit, because beyond the point, the subject matter experts only will guide us. Okay. Yes, ultimately you have to apply your mind and your judgment because you are signing off the audit. But the judgment will be then focused and it will be calculative decision rather than just speculating and somebody saying that it has no impact means you're just assuming and accepting. It shouldn't happen like that. Yes.
So while conducting a statutory audit for a listed entity, so the statutory auditor discovers while conducting the audit that a leading forensic investigation expert is being appointed in the name of risk assessment. Simultaneously, the legal experts are also appointed, and simultaneously, the industry in which the company operates, the industry experts are also appointed in a, let's say, 15 to 20 days period of time. So, what are the extended procedures, or as an auditor, how should I deal with that particular issue or in that particular scenario?
Okay. I think the extent which you are saying is the first reaction to this is there's fundamental wrong in the company. Okay, it's not about a particular area or a particular event. So, as typically, there is a standard audit called, it's not a going concern. So what kind of procedures you will do when the entity is not a going concern? So maybe we have to go to that level to, have this. And to my mind, when you are doing the audit and when you are issuing an audit report, to minimum, it should have emphasis or matter in this that these things are happening. If you have to sign the accounts before you actually get the forensic audit report or even the risk assessment or even the legal compliance report. In, to be frank, you should not sign before it gets out because you don't know what kind of implications it may have. But even if you have to, you have to have the emphasis on matter to a minimum and if required, qualify the report. Because these days, frankly, and when you have the NAFRA with you, and as you rightly said that you have the insolvency petitions going on, etc., there will be, we are all soft targets, auditors community. So whether we have taken on due diligence, that is most important. And first and foremost, we have to qualify the report and ensure that the disclosure is there in the notes to account as what is happening in the company, so that all the stakeholders are aware of this. Especially women concern, there will be some issue as to the net worth of the company. So typically external liabilities, statutory compliances, there could be fraud risk assessment. So now this is the opportunity if suppose somebody wants to defraud this. Again, here I can say that having the expert would be critical, especially when you're saying that the forensic auditor is appointed. So you can have your expert from your side as well to guide you. So you have to ensure, take all the precautions as auditors.
You need to have a civil engineering.
Yes, absolutely. You need to know that, and so whether you in your goals, there will be some association with the company, especially in terms of inventory valuation, etc. And if you are applying Index 115, so
Consumptions.
yeah, you can have. So these are the standard procedures that we have to analyze the trends as to whether any issues are there in the financial statement. Unresolved content issues. So, there could be few issues which are below notoriety, which last year you had accepted as auditors. But this year I would say that now those are becoming material significant. If as an advice in today's world, you should not have any kind of unresolved audit issues, be it material or not material. There should not be any unresolved audit issue. But if there are anything with respect to controls, etc., you should ensure that these are resolved before you start the next engagement. Now, this is where internal audit also. If again manufacturing entity, you have presence across India. Internal auditor is qualified last year. There were a lot of issues in the company, and we find out internal auditor itself has changed. That's a big red flag as statutory auditor. Of course, any qualifications in the audit report, you need to. I think this is standard that available in terms of engagement preparation of financial statements. For even now, if you are accepting any small audits, and in some cases, client may expect that some support from you while preparing the financial statement. As an auditor, you should not do this. especially when the audit trail requirement is coming to the picture. Okay, there cannot be a trail of auditor is preparing the financial statements. That should be clearly communicated in the engagement letter, and we as auditors need to ensure that is correct. There is change of this change in terms of engagement. See, for example, one case which we have encountered that changed and there was a foreign term from the company. Suddenly he brought this one format, template, etc., to which a lot of instructions took place for the classified or you can say the key information part. So unless we as auditors we have the information with us. For example, in today's world, especially in the audit of banking and finance companies, you need data analytics. Right? You cannot take the data in the Excel and you can do typical traditional logic. So you need that entire dump into your system. Now, providing that dump, there could be some limitation that we will not share the data. But unless the dump is available to you, unless that dump is massaged to audit tool and outliers and the form, you will not be able to do it. Even for sampling purpose also in today's world, we all use automated techniques, right? So there is no longer just pick up 20 sample and do the audit, right? So unless you have the information with you will not be able to do that. Okay, financial information is pretty simple. Let's say if you are doing an audit of banking company or even non-banking or even insurance. So each RBI they have a set of disclosures. And we are auditors, we need to ensure that we comply with this. In one recent example, there was a housing finance company and National Housing Finance, National Housing Bank, they prescribed the set of disclosures. No, there were no issues as far as financial numbers are concerned, but there were few issues as far as disclosures are concerned. Regulators take this very seriously because it may affect their own database and their own monitoring purpose. So that may cast additional duty upon us as auditors. Any questions till here? Yes. Next one is the financial reporting center. Some of the is there. Your company that schedule is there. So additional reporting standards like this IRDA or even the RBI directions, etc., which may require additional disclosures in the financial statements.
So in case of a company,
Yes.
this auditor has qualified the report.
Okay.
So you get the going concern is affected because of non-payment of dues to the financial creditors. The same auditor does not continue next year. Of course, when you say that some discussion may or may not take place, and if at all it take place, you may not get the proper information from the previous auditor. And now you are appointed as the auditor of that company. So what should be your approach and how you should deal with this things? Because it is the management's responsibility to see that the entities are going concern and auditor will, because in my own experience, I have seen so many balance sheets you have signed that it's not a going concern. Unfortunately, this with the confidence management is turned around. You have seen that also. But this 3 to 4 years, I really appreciate.
Yeah, I think in my understanding, there is no completely one way of answering this question. So, I think this is where our professional judgment comes into the picture. But having said that, the minimum set of imperative procedures which you need to do, for example, when you were saying it's about the financial creditors and there was some issue in terms of balance confirmation, right? No issue. So if suppose there are identified issues, you cannot proceed with those opening issues. If it is related to the judgment part of it, so every auditor can have his own judgment.
But in this case, the default was there up to 31st March 24.
Okay.
And in 25, the default is made good. So subject to that, the situation might change for the next year. Submission cash flow with the projects, the ongoing projects.
Yeah.
In pipeline projects or whatever.
Yeah. So, right. So, for example, for this, if he is calling for the report earlier, or even the CARO, then there will be some qualification related to this. So, we as until next auditor, we have to ensure that, as you rightly said, that if suppose they are going to about this fact, adequate cash flows are there, and you do your own procedures to ensure that this thing is not recurring. I think there is no bar as to not continuing this. We are not bounded by those kind of reservations. And even in vice versa also, you may have some additional things which figures will qualify which we as auditors can do anytime.
Sir, one question I can also do. Which housing finance.
Housing fund,
I
okay.
cannot build the rate.
Okay.
Housing finance company has paid to the builder more money than what is instructed by the purchaser. Without following the due procedures also, how to do about it, because the transactions is in crores and we cannot go through all the transactions. Suppose one instance is found, what is to be done for an auditor, what is to be done for them? So I'll give you an example that instruction is to transfer 10 lakhs to the builder. Housing finance company has transferred 20 lakhs. Okay, here it is possible that it is available.
Okay. So just to put it differently, the sanction is there for 10 lakhs, you were saying.
No, sanction is say for 1 crore.
Okay.
Purchaser has given the instruction to transfer 10 lakhs to the builder. Progressive.
Basic milestones.
But
Okay.
the housing finance company has paid, it is a public limited listed company and lots of cases, EOD and everything is going on now. How does auditor we should report on? Because it is a one instance, if I go to other, I will find many more.
Yeah, absolutely. So again, just to summarize this, so milestone is there. As per the milestone, you have to pay, let's say 20% and you have paid 40%, right? Okay. So in my understanding, there are two, three issues over here is, in terms of course, I would directly ask about that case, is there any favoritism is getting played over here? Okay. Okay, fine. And if suppose it is, now we have to also see the physical progress. See, for example, now I think RERA, etc. There is also supporting information available about the projects. I'm not sure technically how it is done, but there could be some information and even some information with the company itself, because whenever there will be milestone funding, there will be some kind of internal reporting is getting done that this project is completed, let's say, up to this, and that's why we are funding this. So suppose there is a completely disconnect of what is physically getting constructed versus what you are paid to builder. Okay, I see there is a red flag here, and probably this may require. I'm not sure as to exactly qualify the audit report, but this may require the attention of the typical in language those in charge of the governance, which is the director level. Second here, if suppose this is the one case, how we have to ensure that for all balance cases, this is not there. So that is on the company to ensure. For example, they say if there is a milestone funding is there, in these days, even with the construction housing finance companies, they have information systems for the construction finance. So through their systems, if they can take download and support that against a particular milestone, what is the payment which are done? Because there will be some masters set up in the system as to for a for a 5 milestone you have to pay like 20 to 20%. If you are paid 40% of profit, so we have to take such report. I don't think so. Beyond this point, you may be able to conclude on the completeness part of it. But for a particular case, definitely you can, and whether this may translate into kind of fraudulent activity. Okay, because even now with the RBI, and I'm sure we have also seen the AFRA circular again, that even though you are not a party to the fraud, if as an auditor you witness that anything now the monetary limit is more than 1 crore, you have to report to the central government. Even the RBI also you can report to RBI. Okay. These may be extreme steps, but I think the first and foremost is you have to have the business logic around it. In other words, housing finance may not be in a builder case, but when as a housing finance, you have a capital adequacy ratio. All housing loans qualify for the risk weightage. Okay. But if suppose they cross the housing parameter, then that particular loan will have cost will be eligible for 100% risk weightage. Further, it will fall as non-housing finance. Because it stress that minimum 60% of your business should be housing finance. 40% you can still have with the higher risk weightage. That fact also can at least say so to the regulator, there's a correct reporting which is happening for the capital adequacy part of it. At least these things you can verify. And beyond the point, if suppose this thing is happening rampant, maybe time for even the call for the resignation from audit.
I asked for the architecture report and the photos of the
Yes,
construction,
yes.
which the housing company failed to provide.
And if suppose it is possible, in not all the cases, you may physically visit the premises.
So in fact, in this case, you have very rightly said that RERA also mandates that these civil engineers have to certify the
Yeah.
level of activity. At the same time, the NBFCs also have their own team of architects and civil engineers. They certify. So they should not have been an activity.
Yes. Yeah, in this case, putting more reliance on client system may not be right. So you may have to have your own set of external input. As I said, you can even directly visit the property just to witness whether the photos are also fabricated. You can do that. In deep fake video, I think anything can happen. I'm going to start the section planning. So again, I will go in this risk assessment. I think we have all studied the auditing standards around it, and this has been talked a lot. But in my experience, unless you identify the businesses and audit risk, everything out of the business, you will not be able to do the audit effectively. Okay. Should say that we only have to see the accounting part, we only have to understand the debit credit, we only need to understand the accounting standards, auditing standards, but the risk associated with the company is most critical. And especially when you are doing audit in India's environment, you are doing audit of highly regulated entity, risks are critical. So as you rightly said, so in this kind of company, construction finance could be a critical risk. Critical audit risk that you may seek specific assertions on that. Okay. Business understanding is uh, I can say that in our firm we have specific template of how to understand particular business. Okay, each one can define, design its own. See, for example, let's say we have learned the concept of Porter's five forces. Okay, who are your competitors? Whether the entry barriers are there, exit barriers are there. So one may ask why you need information when you're doing audit of financial statements. But to understand that particular industry, especially if the industry is new to the audit firm, I think it's most important. And the Steve Jobs used to say always that some dots can be connected only backwards. So this is the backward dot which you will connect that the business understanding. While performing audit, you may find some issue that it's not getting correlated. Okay, so understanding is most critical. You may understand through the ratios, analytics, you may understand through peer comparisons. In today's world, you have analyst reports also available with you. Lot of information is available. You have to gather and you have to gather your business understanding. So drivers, as I said, so for technically. Okay, so I encountered that while doing some acquisitions of startups, the kind of money which they pay, okay, as an accountant, you may say that this is absurd, right? But what the underlying it has is the non-financial drivers. Okay, in one of the companies which I can definitely share that we have seen that number of engineers they hire, they used to determine the transaction price. So as an accountant, we will always say that why it is dependent on hiring. So what is the reply was the more number of people we hire, we are able to churn at least 4 times fast through our billings. So that's why our parameter is the kind of engineers or kind of expertise we have in our company. So this is kind of business understanding we should be having. We can also delve well upon the business strategies, whether they are really adding to the economy. There could be some great areas. Okay, again, you have to ensure that you do this before you actually start. Audit strategy, I think this is pretty standard for the statement level, balance sheet, P&L. For each capture, you may have different strategy. You have different sampling to for example, for share capital, or even for long-term borrowings. The sampling would be different, the risk would be different. For revenue, sampling would be completely different. For salary, some confidentiality is there. Now the performance bonus, client will not show you the working. Let's say in a tech company, which forms almost 10 to 15% of your total expenses. How will audit those? So you will have the strategy in place with you for doing the same. So keep on identifying how how the fraud can take place. Just sit quietly and make 10 things out of it in terms of this is the way that fraud can happen. So this is the fraud risk. Okay, this simply distributing your money. Okay, my RBI recently came down heavily on the personal loan portfolio for unsecured. They saying that we may be distributing the money without proper assessment of it. So this could be a fraud risk. So identify the fraud risk. First, ask company.
End use. End use.
End use. Yeah, end use is the classic case, especially in the housing construction. It's a way of doing the money laundering. Which you don't know. Suppose ask the company that what steps they are taking to mitigate this. It's not our duty as auditors or our primary responsibility as auditors to have the controls around it. First, to ask company. team's knowledge is the most important. Let's say if you're doing audit of bank and person has not only has not read the banking manual or IC has released the new edition of the bank audit, or but also he has not served in the financial service sector earlier. He's a typical manufacturing guy. Even though he may be a banker, even though he may be the best accountant, you may have limited use in the audit.
Banks have their own credit policies,
Yeah, banks have, but
investment policies.
the nuances which they offer, for example, just again to that case only, one of the learnings would be that to a man who is the best person doing manufacturing audit, he will never be able to find out this issue in a derivative portfolio because he will not understand. Okay, unless you have the exposure. So the team's knowledge is important. Wherever required, do upskilling. For example, insurance conducting courses on AI also. So you have to ensure that you are getting your staff enrolled for that. Do some courses online. Infrastructure support. These days, having your own machines is most critical. So and of course, other infrastructure support as to the when your team is working, let's say offsite on a plant audit. So what kind of infra use support? Ideally, the timelines. The most crucial thing that in today's world we encounter, the audit committee or the finalization is taking place on 15th April. You are getting the draft financials on 10th April. What kind of audit you will do? Even AI also may not be able to do that effectively. If you deploy robots also, they may not have that kind of judgment. There may not be any adequate discussions before it get finalized on the 15th April. So agree the timelines with the client so that the draft is given to you that T plus let's say 7 years will come back to you in terms of our review points. Of course, this is easier said than done. But these days we have some knowledge. We can optimize set the calendar with the client. At least let's say if you are doing audit of distant entity, you are presenting your audit committee, you can present that these timelines have been agreed with other management. If the timelines are not, you have to highlight this part. Any other point before we move? Yeah, and the next is scan for the use of subject matter experts. Of course, in the recent case, and as I told earlier, that information systems expert, in some companies you may require GOC specialists. Now, in some cases, chartered accountant may not be useful for evaluating certain legal position. So, so various SOEs are required when doing the audit. You have to plan for them. Of course, that has to be involved in your regulation part. It's pretty standard that you have to ensure the involvement of the key engagement members. Because sometimes, the signing partner may decide, okay, I will plan this audit, you have to execute now. You have to see and say execute. That's not right. Okay, you have to your strategy. Independence, independence, independence. Activities you can do, trend analysis, spatial analysis. So, in the audit, that subject to the materiality part of it. So technically accounts could be misstated, but we have to ensure that accounts are not materially misstated. In today's world, no stakeholders understand this language of the audit report, although it's pretty clear. So to ensure that materiality is set up right away, and that materiality could be different for different industries. See, for example, let's say if you are doing an audit of insurance entity, and insurance business, if you understand, now the business understanding is important. At least within first 5 to 6 years, they may not have the underwriting profit or they may not have the margins. Okay. So the driver cannot be your loss. Because of the actual information. Okay, you only understand the profit and loss of the insurance entity. So driver could be the total premium and the percentage of them. So what drives the neutrality is that again this is a professional judgment, and we need to you can say substantiate that why we have chosen different from let's say 5% of profit before tax is a common thing. If you are choosing anything different from this, we should be able to explain through our procedures, right? Any questions or any practical difficulties which you have encountered?
That's why the very first requirement was more protect of insurance companies.
Yes.
Now it is reduced.
I think risk assessment we have discussed inherent risk control risk. I think I am not going to now again let's say even 4 or 5 years back, while I did not stamp it properly, but IT general controls or IT environment risk was tick to the box that we have evaluated. But in today's world, it's become integrated. So it's imperative for you to consider the IT environment risk, especially if you are doing an audit of BFSI entity or banking finance services. There are a host of applications. So company may or may not give you the entire list of applications. Okay, we have encountered some information where they did not disclose some server locations to us. Okay, and on that basis, you may even deny the audit because IT risk in today's world is most critical. We are coming to the actual performance of it, and we are taking the issuing audit. So before any change in the audit strategy plan, it may change during the course of the audit. While fair enough, ensure that you go through the change plan and not just work. So the biggest thing which we have seen is you are executing and there is no linkage to the audit plan, or the linkage is not so strong. So you first revise your audit plan or revise your strategy, then you work. In your work purpose, I think this is pretty standard. We have to ensure as auditors that we have our own assessment of risk and controls. In addition to the internal financial controls, you have mapped with the requirements from the companies and Caro. You may have some other regulatory requirements also coming into the picture. So this is what the looking of audit plan to the execution piece is most critical, which I think many of the CA firms did not in this. Yeah, this issue tracker is effective closure. Can anybody tell me what I meant by this? Right, absolutely. So after having done the entire work, so you may have some points to discuss. Those points will form part of your issue tracker. Now, as auditors and especially when you are having a young audit team with you, they will be excited to find issues because unfortunately our KPI, or as an auditor, our KPI is to find more issues. Okay. So they will just jot down, okay, there are 15 issues. Having documented those issues, it's our duty to ensure that they are closed properly. And this is what I have experienced. So now closure, what you mean by closure is either you will have qualification in your audit report, or you will have presentation to the audit committee or to the charging government. You will issue some management letter, etc. So there will be some kind of closure action, or issue would be open also. If suppose it's not material, it will be open. So next year when you will come for the audit, you have to refer to the last year's issue tracker. Right? I think this is pretty simple, which everyone can do. Just maintain your list of issues. In my experience, one of our partners used to maintain one diary. And we used to say that once he has noted everything in his diary, unless it gets referred, audit report will not sign. So that's kind of that's a real documentation which I can say. I think audit completion, we are all aware that how to audit report format standard, cover reporting process standard. So that's it's not tricky, but we have to report completion checklist for direct indirect tax control law. Now compliance with the schedule is the most critical thing. MCA, I'm sure you must be seeing the notices issued to the CA firms, etc., for non-complying with the Schedule 3 requirements. It's worthwhile to look at the peers in the industry for ensuring the disclosures, whether you are missing or something. For example, you are to be part of a small bank, let's say HDFC is a big bank, so you have to see the disclosures of HDFC and you have to ensure that whether those set of disclosures are minimum are met. Any questions? Suppose we are all yeah. In today's world, I think specifics that you need to know is, I think at least for large clients, we need to deploy analytical tools. Even now, ICI also promoting the members to use the different tools. So you have media tool, you have ECI tool. In today's world, although our report states we have to report on the material items, but audit committee or the board of directors, they expect us to opine on the entire population. Right? So unless the population is getting tested through the analytical tool, you will not be able to give your opinion. Understanding IT systems, IT applications, IT infrastructure is must. You want the experts. Complex transactions and accounting. I think this is new. For example, as you retail company or company having different apps, and then recording of revenue becomes critical. Okay, especially on Swiggy, Zomato, and rather than doing all of Swiggy, Zomato. That's it. So understanding of typical industry and understanding of that complex flow is important to perform the audit. Information, I think, having more there's no we have faced so many peer reviews, even the quality board reviews in our firm and some scrutinies. So most important here is that if you are giving true and fair opinion, why you have given true and fair, if suppose you can explain right from your planning stage to the reporting stage to a proper work paper channel, I think that is the important. If it is unfair, or why any approach was given. And also why should be manual that. So that's why the cross linking of your planning to execution to reporting is most important. And this is where the forms fail and there will be some issues coming through your peer reviews. Effective communication, as I said, that through other people you can communicate through presentation. So these those for different meetings, vendors will present with the audit committee. They can highlight the issues which they will not be able to highlight in the formal report. Okay, including any control issues, including, let's say, forensic, it's been discussed at a lot. So this you can disclose and this becomes part of the formal minutes of the meetings of the audit committee. So this is not something we are discussing offline. This becomes part of statutory posts, okay, statutory records. So we need to present issuing management letter. Can anybody tell me what do you mean by issuing management letter?
Well, issuing some letters to the management, and whether we are ready to accept the terms and conditions of the management, or
Okay.
we are denying to accept the condition.
Okay, I think this is okay. So this is first communication, but this is
But the scope of audit.
no, not so. Anything? Yes.
Communication takes place with the management. That we are.
Okay, partially was correct. Yes.
Management, what are the issues there is with the audit, is
Yes.
taken care by the management.
Yes. Yes. I think you are there. So there are two ways to communicate with the management. First way is taking the management representation. So there will be some set of standard points which on the level of the company you will take as a form of management representation. But if you find any control issues in the company, for example, the issue which are referred again, this is not the control issue, and there could be some issues which you want a company to improve on. So you can issue management letter in your own letterhead, and then you can discuss with the board of directors, or they will give this letter to the board of directors for the formal response. Again, this becomes part of your statutory records. Your issuance of management letter is not seen as clean every time because not every company will have to issue. But some cases it may require, and going forward, let's say, God forbid it doesn't happen, but let's say 3 years down the line, if suppose there is some scrutiny, okay, some issue is there, let's say we have highlighted during forensic, we as auditors will be protected that we have already issued this through our management letter, which the company also agreed on. See, beyond the point, you can't ensure that false brings the water. You can take all to the water. So you can get the response from the company, but implementation is all depending on them. So you as auditors have done your duty. Yeah, audit committee. So the communication to audit committee itself is a letter to the audit committee. Successful completion within the agreed timelines and with the documentation complete. So you may have successful completion, but the documentation should be complete before we actually sign the financials. Okay, so this is 20th April is the audit committee date, 20th April 25 for year ended 31st March 25. Nothing can be recorded after that date. Okay, these things, NAFRA, even ICA peer reviews, they take it very seriously. And now these days you have all time stamping done, etc. So even if you want to hide, you will not be able to hide.
Because of the digital footprints that.
Yeah, yes. The training is getting good. That's why this audit trail is there. Now, one of the objectives is to ensure that who has done, when it has been done, and what has been changed. Of course, the last and important here that as chartered accountants and auditors, we have to value add to our client within the boundaries of our own profession. So within the boundaries of accounting standards, auditing standards, communication, you may have your own valuation. That can be communicated to a presentation of opportunity, even sometimes to the management letter that we have suggested something and which you have also implemented. Okay. So nothing wrong, and because in today's world, while it's a dangerous space, but every time the client always say that we are dealing with a business partner. In other environment, they used to be auditor and auditing. Now they are terming it as a business partner. If you see this in strict sense, it is actually not correct because we are reporting to shareholders, we are not reporting to the management. So we have to be independent, and sometimes there is a lot of discussion or there is some disconnect, which is actually seen as a good sign of doing the good audit. But having said that, we have to ensure that whatever values which we can give as auditors or as third parties, we have to give. So prosperity or rather the prosper phase of it is successful completion, outcome application, rights of issues. In each sector that the best presented accounts. If your accounts forming part of it, we as auditors can also feel that you feel pride about resources. You get appreciation from the audit committees or directors. Improve financial health in some extent, including compliance, risk mitigation, stakeholders confidence. Now, this is most important, especially when you're doing audit of a different retail entity where the foreign promoters are there, there are bankers involved. So, stakeholder confidence is important. So, my experience in terms of the doing this entire journey of audit is at each stage we have to have a professional skepticism in place. This is you can say if you have read the issues from NAFRA orders which are now public. Okay, in many cases. So earlier we used to think it is only about the documentation, but it is not really about the documentation. It is about the professional skepticism, which is written, which we know from our you can say childhood days, but sometimes we don't apply it, and we have to apply it throughout our engagement. We have automated workflow and we are doing some fashion. And this is where the planning, pursue the execution, should take the time I think upscaling some offsites also is important because ultimately we are dealing with the human beings. Okay, so the more that they are energetic on the field, I think they will give you the lot of output. Client coordination is must. Okay, so getting the information on time because ultimately all said and done, you have to get the information. Okay, so the and coordination is important. Audit calendar. So this I found especially after the COVID when you have the extensive use of online tools, MS Teams, even Zoom meetings, etc. We use we generally set up cadence with our audit team. So let's say Monday 5 o'clock there will be a reporting call. Tuesday 5 o'clock there will be reporting for some other client. We have the proper cadence built in. So even if you forget to review something, so the calendars will always remind you of ensuring the compliance or ensuring the status of the audit at each stage of reporting. Documents sign off before you actually sign off the audit. I think this ends my presentation. After I'm just giving you the glimpse of it. So there are issued certain orders. I'm sure that we may not discuss here. Audit quality documentation issues are there, which I said that professional skepticism is missing. Some the proposed amendment to SSC terminology of the group auditor is not being responsible. Actually, those coming after the component auditor. So let's say you are the auditor of ABC and company, which is the group, and ABC company is a subsidiary where the auditor is different. They are actually demanding the work papers. They are actually asking that principal auditor should be forming part of audit committee meetings or even planning meetings to actually doing the audit. Now, this has got various concerns. I think we may not discuss all here, but this is the reality. Audit trail, if suppose you have any particular question, you can, I think, ask here. We all know this requirement of audit trail, which is there from last year. Actually, it was required earlier, so become applicable from last year onward. Typically, when change was made, who has made the change and what has changed. This is the trail that we rely on audit. Yet to be settled in some way, but I think last year we had a lot of deliberations when issuing the opinion on the audit trail. Basically, you have to understand which is in scope of audit trail because your client may have 1,000 applications, but now not all of the applications will be in your scope because they may not affect your financial statements. So you have to understand which are in scope, which are not in scope. How much time we have? Done. Huh? Okay. So again, here the critical factor, I'm assuming that we are all familiar with the basic principles of audit trail. So these are the learnings that which we have got that the intent of audit trail. See, for example, this requirement is not there globally. India is the first country to have this requirement. So what is the intent of audit trail? It's not just about having the time stamping, but it's also about reconstructing your books of any kind of fraudulent activity. You should be able to trace what is the source of it. So to understand the intent, when you are the best course when you are doing this audit trail verification is whether the client has the adequate book close process. Okay. This I think we have forgotten. So while it was there in the textbooks, we don't take this so seriously or was not taken so seriously before the audit trail kicked in. But if you have the proper book close process and ensuring hard close, that time stamping is most critical because you may have some time stamping after the date of your audit committee or board meeting. There will be some entries. Okay. which is completely no. And that is the intent, or that is the intention to catch this. So we have to ensure that there are proper vehicle controls, segregation of duties becoming critical these days. When you are having to audit trail, for example, somebody is doing the purchase counting, or other somebody, let's say, heading the purchase stores and passing the entries in the books of account. This is not possible. The audit requirement is all trains created and you have to verify as auditor. So the segregation of duty is important. In some cases, or other than all the cases, you have to involve IT experts, because some information now, in this second year, the retention of audit trail records becomes critical, because first year they may not have done that audit. So for minimum 8 years, you have to have the recording of all the audit trails. So how the company is maintaining, how it is not being tampered with, we as accountants may not be able to understand. So involvement of IT experts is important. And in any case, in case of any doubt, better to qualify. At least as of now, no regulator or even the banker is coming heavily on, suppose the requirement of audit trail is qualified. It's just to give you the example, which is the topmost IT company? TCS. Okay. Both TCS and Infosys, they have qualified the audit trail in the last year. It's a proper rule that, until this is that tech company and having qualification on the audit trail. Okay, it's possible. So it's a factual reporting. You need not worry as to the interpretation of it. I think we not read too much. One thing that in the audit course of audit trail, which I have noticed that sometimes user IDs are getting shared. Okay, it's dangerous because you will have a timestamp, and some companies do use the common or generic user IDs. It's not right, because who has changed or who has updated should be there in the audit trail. If there is a generic ID, the answer to who is not there. So you have to qualify the audit trail. So for example, now, so audit trail requirement is applicable from 1st April 23, right? So the first year has ended now. So from that year to 8 years, you have to maintain the audit trail records. So for this year, you will see whether last year's audit trail record has been maintained or not.
And the audit trail reports by transactions on itself. So does it have any impact? There should be a separate audit trail report.
There will be separate audit trail. Yes, yes. And
Take a case about expanding the audit law. You don't know where the files are kept, so how do we ensure that audit trail has been kept?
so that, I think that is where I said, right, you need to have a system expert with you to understand how they are. Yeah. It will be purged, right? There will be.
First.
Yeah.
You should point it.
Yeah. Yeah, that is the only thing we can say. And frankly, if suppose no harm in that, if suppose that whole data also copy is with you, no problem. So that you are comfortable as to the data. But unfortunately, the company is using SAP and lot of transactional data. Now, storing of data is so critical and it requires so much of space. That's why I said that you need that system expert to actually understand whether they are retaining it adequately or not.
The small and mid-sized firm. Generally, people are using the tally. Okay, every 6 months there is a change in the tally software. So approximately we have to use a 16 database for the tally. And every time it is not possible to make the tally version. It is for the this version is utilized. So how to keep a track of that?
Technically, from a tally perspective, even I don't know how it is being done in terms of operationally, but there is no other way of doing this. You have to have that. Only thing is that edit log version, even if there is an update in that, edit log version is must.
And that I agree.
That
But generally every 6 months there is a change the syntax of that.
what kind of change?
GST update, anything, whatever.
That doesn't change the edit log data.
That will.
But generally take the tally data backup for our tally edit log. So we have to know how much data backup we have.
See, actually, the requirement is on the company to maintain the data. It's not we as auditors, we need to do that. But I'm sure Tally will have its own way of the edit log version. If you go to their side, I think there is a you can download. Okay. Okay. Okay.
So, okay,
Yes.
so this is in regards to tally only. In tally, I have seen that sometimes accountants pass the closing entries maybe for statutory entries like GST and all after the financial year. And it's for the monthly purpose, maybe after 28th and all. So whether that much data which we pass after 31st March, for example. So whether there is any reporting requirement for that, or it's in due course they are passing the interest, so there is no harm in the amount, it's not affecting my balance sheet as such. It's basically a closing interest. So whether that timeline after passing 31st March, is there any reporting requirement for that?
See, my also because let's say if this account is getting signed in the month of June. So the bar is once it gets signed, let's say 15 June is signing date, shows that you cannot do pass any interest.
Sign up, that should not be any.
But having said this, before that, let's say the cash bank accounts, they are all real time accounts. You cannot pass any entries in the cash and bank book in the month of April or May, right? It has to be before 31st March.
So, but in that cases, like I've seen in the saving transaction systems. So the cash vouchers and all from the side comes later on, maybe after.
That is fine.
Yeah, so a reasonable time period should be.
That you can as per your understanding of the client, that as you rightly pointed out, reasonable time period that you have to. But slowly and steadily, I think this is where the intent also is that they will start asking the question, why there are entries after the year end?
So the process may be defined such a way.
Yeah.
That the period could be defined.
Yes, that could be different.
So one more thing here, I have noticed one thing, sometimes accountant do changes and alter the entries. And since the auditor gets the timestamp and all, sometimes they try to change the system date itself and then pass an entry. It is possible, sir, but how to track it? So for example, like in June, they want to pass any entry of 30th March. They change the system pieces data to 30th March and then pass an entry, and audit trail gives 30th April only as an alteration date. Huh?
In Tally edit log you're saying?
Yes, sir. Because the Tally captures the system date as an alteration date in the Tally. So it is happening, I have seen that. And I have applied also that I can also pass an entry on 30th March in June.
I think we can discuss it offline. I think this is not this is not the right.
I have seen that it is happened, but how, as an auditor, how I be able to track that whether
See,
there is corporation according?
I think let's take this question off. It's not because there could be a discussion on something which shouldn't have happened at the first place. Okay. I think ICA has given the guidance note on the audit thing. The board accepted the so I will in the audit trail piece, not all the entries can be covered. So some entries which or some information which may not have any implications on the financial, they will not be covered in the scope of audit trail. The big question in today's environment also is that whether all the applications are covered for the peripheral software. So if the company is using Tally and for the revenue there is a separate system getting used and the revenue is quite heavy. So whether that system also should be taken into the consideration. So the answer is if suppose there is an automated interface between that system to the Tally without any manual intervention. So technically you have to go to that particular system and do have the audit trail piece. But if suppose there is a manual intervention before it gets into the Tally, okay, and there is a proper maker and checker or due process followed, that system may not be considered under audit trail. One thing to caution here is, earlier we used to think that as auditors, the more we include the systems into our scope, better it is. But it's not the same. Okay. Do not take responsibilities where it is not you are not supposed to take. Restrict your scope to particular system and particular set of transactions itself. I think law everyone version we are all familiar they are also it contains how to check what key takeaways from articles. The first and foremost, I think the only important here is for since the audit trail is applicable even to one person company. Okay. Wherever you are auditor, please do not be accountant of that entity. Okay. And in all practical sense, even if you want to, let's say, educate clients on the accounting entries, do not use your login or your machine or laptop to pass any entry. First of all, do not be the accountant auditor cannot be the same. But even if you want to, don't pass any entries for the client. If client says you pass the entries and send me the reverse balance, complete no, because the trail will capture. Okay. And be aware about the runouts, enforced entries, etc. Because this is also one of the intent that no one can force you. This is called real management overhead of control that management is forcing you to pass certain entry in the books, which will have the audit trail and which will be difficult to explain in the later course. I think these are the takeaways. This is it from my side. Happy to take any further questions and you can reach out to me offline also whenever you want. Yes. Where? Okay. Okay.
And the company showing the balance are not on hand for years together, right? Now, as an auditor, if I come to know that this particular land was auctioned by the authorities, there is no documentation. The management has to know who that this particular land was auctioned, somebody only taken the permission, no money, claim nothing. As an auditor, what precaution I should take? Because I have come to know some other sources that this particular land was auctioned by the authorities, they did not develop that. There's no money then. The management said that we try to contact the authority, they are not getting any response from them. They don't know where the money has gone. So what to do about it?
Okay. But what is the evidence you have that?
Extra verbal communication. What is it? So, I mean, tomorrow somebody comes to know that this particular law what was said, that's an anchor. And the banker says an auditor, why didn't you report it? So what expression I should take as a documentation or what, I mean, because it's sure that it is not shared, right? I know for sure. But I have no evidence documented for any communication from any authority or anybody. So what is the consequences of such events? Showing, right? From tax officer to what tax officer we can this what is your not from capital gain, there's no taxation is that. So what is the way out?
I have answered. When it is auctioned now, it comes into the media.
Once you just that, you do not know.
In paper, it's, see, I think my understanding this is a typical situation that, verbal evidences might not acceptable. So I think you may not keep quiet. You can sound up and if required, you resign yourself from it. See, that is the best thing you can do. Physical verification, I don't know whether it can still. See, there are all evidences you can take. So, see, companies are all evidences in terms of title, etc. Now, if you in terms of changing the option, and documentation is not you search. Initial title search through the law firm, you can best you can get. No, that you can ask client to do.
The client says, I have access to.
So see, there are two situations. There is a design,
Okay.
or if you're still wanting that audit, you appoint some firm on then we have to do title search. And to be frank, no one can stop us.
So let us assume that I do the title search, then where do I report it? Only the most of the part of the accounts?
Then it's a qualification. Emphasis here, even if the matter is so good, you can qualify the report. Yes.
So in the previous slide, you said that Tally Prime does not comply with the NCA requirements.
Tally Prime will comply because in Tally Prime you can still, you have to accept the auditor requirement. Edit log is a question of discipline.
Because many times we don't take the edit log version. Because
So then what you have to do is, let's say it's a factual reporting. Assume that, from 1st April 24 to 31st Jan 25, they don't have edit log version. You simply report that you don't have the trade up to this period, and post this period they have trade. It's a factual reporting. You can mention that.
as per NCA requirement, edit log is something.
Edit log is compulsory. Yes. Even though they are not, they are saying that they are not disabled it, but as per the requirement, edit log version is compulsory.
But if it is enabled, if as the auditor if you said that.
But then you have to say that it's not disabled throughout the year. If your system expert can say that every day you can check and confirm that it is not there, then probably you can take the risk and do that. I think this is from my side. Thank you for this overwhelming response and some of the value. And you can also reach out to me to LinkedIn. I have my coordinates shared. Thank you for giving me this opportunity. Thanks, Vinay, again for this. Thank you.
This is a very enriching and enlightening session. I think now we are saying, we can say that we are geared to be prepared, right? Okay. So there are a few announcements. The institute has released the bank audit book, which is a manual, and which is available at the institute at 150 rupees. But for our members, we have kept a token money of 50 rupees. Few copies are available. Members can take them from here. And also Taxman is there. They have very good books and they are giving a very good discount of 35% for people who are buying the books from here. Also, their online subscription is there, available at 20% discount. Yes, and to prepare mentally also is it's required that we should be physically fit. So it's an initiative from Jevinagar Study Circle that on the 22nd, that is coming Saturday, we are having a Jevinagar walk at June Beach in the morning, 6 o'clock, and will be followed by some healthy refreshments and a Zumba session also. There will be a small gift for all the people who have been participating. So the registration form will be circulated. Please register and do come and participate and enjoy. Now to propose the formal vote of thanks, I call our Deputy Commissioner, C.A. Kailash.
Good morning, friend. Before we giving vote of thanks to our speaker, इतनी सारी लार्ज ऑडियंस मेंबर्स को देखते हुए मैं इतना ही कहना चाहूंगा कि सीखने की कोई उम्र नहीं होती, सीखने की कोई उम्र नहीं होती और ज्ञान की कोई सीमा नहीं होती। जो राह दिखाए सही मंजिल की, उस इन जैसे रोशनी की कोई कीमत नहीं होती। Sir, I express my heartfelt gratitude to our esteemed speaker, CA Chaitanya Vinay Joshi, for delivering such a practical and insightful session. Sir, your structured approach to audit planning, risk management, and execution strategy has provided us with invaluable takeaways. The way you simplified complex audit challenges and offered actionable solutions will undoubtedly help us in our professional journey. इसके सम्मान में मैं सिर्फ 2 लाइन आपके लिए कहना चाहूंगा सर कि हर मुश्किल को आसान बना दिया, जो समझ में न आए उसे भी समझा दिया। आपकी वाणी में ऐसा जादू है कि जटिल चीजों को भी सहज बना दिया। तो उस वक्त रिक्वेस्ट
clarification. The Devinagar brand is open for members and their family also. So please do join in large numbers. And we take a short
break.